Hello, swing trading strategy for beginners. How to use trend lines to trade stocks. We are going to use Thinkorswim platform, maximum daily chart, and we are going to analyze 3 stocks on our watch list. The first one is MCK. So you analyze the stocks after the market close, and today is Monday, September 15, 2025, and we are going to analyze the stocks, after the market closed on Friday before it opens this morning. So MCK is on Friday, the price drop. They highlight the ending price in red, which means the buy there is red, and it is the evening price was lower than the morning price, so the price dropped that day. And a green bar means the evening price was higher than the morning price. The price went up that day. So MCK dropped on Friday, but it does not really mean anything to us based on the uptrend and swing trading strategy that we are using, in the sense that with the strategy we are using, we are comparing where the price is to where we like to buy. So we have our uptrend lines that we trace passing by the higher lows of the chart, and I like to call it the valleys of the mountain. So we trace those lines that we are willing to buy the stock at, and by tracing the lines we color the one that we are willing to buy on. So we have those two selected, and right now the price touch base with it at some point and start going up. So we are going to compare where the price is to where we want to buy, and right now is far from it. Therefore, we are not going to take any action. And so that is just what the analysis of this chart is going to be. And next, we will go to MKL, because those stocks are not highlighted on our portfolio. That means we have not purchased them yet. They are not in our portfolio. So therefore, when we are analyzing them, we like to be comparing where we want to buy them to where the price is right now. That is what the analysis is going to be about. So MKL is far from where we like to buy it. Therefore, there is not much we are going to do. We'll move to the next. That's how, when you have a job, you don't have time with long uptrend and swing trading strategy. That's how you'll be analyzing it. See where the price is to where you want to buy, to see if there is any action you want to take. Otherwise, you just move to the next. And that way you can go very quickly through your watch list. So the next one we are going to analyze is MLM. MLM is highlighted on our watch list. Therefore, that means we purchased it already. So we put arrows on the charts to show us where we bought the stocks. The one facing up means we bought it there. The one up facing down means we sold it there. So we bought it there, we sold it here. We bought it again here, and then the price dropped. So we can see that we highlight this purple line that we like to buy at that line, and we started that long uptrend and swing trading strategy this year, 2025. 2024, the date is on the x-axis and the price on the y-axis. So 2024, we use short uptrend and swing trading strategy, and we trade it quite often. Bought it, sold it every few days or so, and then we bought it again toward the end of 2024, and it was done going up and start going down. So we got trapped in it for a while, and probably from November all the way to March of 2025, it touched base with the purple line that we like to buy at, and then start going up from there, and we bought it. So here we are going to talk about the entry point. So when we look at where we purchase it touch base with it, we can it came close to it, went up, pull back, and start going up, and we bought it. So we bought it at the green bar that follow a pullback. This purchase here does not really show up technically how we like to enter a trade, because we bought it at a higher price. Therefore, and we have experience with it because we traded quite a bit in 2024. Therefore, we didn't really wait to see if it's to have any confirmation that it's down, going down for us to purchase it. We just purchase it because again, this any price here still going to be lower than the price we pay here. So we just purchase it there. But technically, let's say we didn't purchase it here and the price is close to this trend line. What I like to do is you wait, because it's coming down, making lower lows. This low is lower than this one, for instance. So making lower lows. So you want it to see the chart start making higher lows. That gives you a confirmation that it's not going down. Is getting ready to start going up. Therefore, you'll buy at a first green bar that will follow a pullback, and then you ride with it. And that is just a confirmation so that you do not get trapped in the trade for a long period of time before it's ready to start going up. So, but I didn't practice that here because again, I can afford to take that risk by trading that stock for a while now. But if I didn't do that, where will be the right place to buy? Could be this area. But again, if you purchase it here, that will just be this low is higher than this low. I'm talking about the red bar, which is higher than this. So few confirmation that the price is going up, you can enter there. But guess what? You pull back. Will not pull back again to touch base with it before it was actually ready to start going up. So you could have purchased it here, you could have purchased it here, because when it comes back down like this and start going up, you'll want it to have that confirmation that it's down. So technically this green bar here will be the right time to purchase it, giving you enough confirmation that you have higher lows. You can trace an uptrend line here. You could buy it there or buy it here, type of things. But again, you want time it right every time. So we bought it there, it went up, pulled back to it before it start going up. So right now, with this purchase here, the price is here. So we are profitable on this trade, and the price is higher than what we purchased it first. Now a lot. So we have some profits on this purchase as well, but not a lot of profits, because when I put my mouse here, you can see the price. So now that we already entered this trade, our analysis on a daily basis also is going to be to compare where the price is to where we like to exit the trade. And it's going to be the next new high, because we are trading large cap stocks, they reach new highs often. So our entry point is going to be the trend line, the support line, the valley line, and our exit point is going to be the next new high. Although we are already profitable quite a bit in this trade, not so much in this one, but we are profitable in both. Is a must for me before I sell it. But I wanted to wait for that to reach a new high. With that going up like this, it will continue to pull back, and I'm thinking it's going to be using this as the support line for the upside wall of the mountain that is drawing. So therefore, it'll be going up, pulling back to it, going up, pulling back to it. So when it reaches that new high, it does not necessarily mean we need to sell it right away. We'll compare how it did it in the past. So, and this trend line strategy rely on what happened previously to see there is a pattern there that we can rely on and use as a formula. So when you reach a new high here, compare that to this mountain peak, it pull back to start creating the support line for the mountain, went up, pull back a little bit, and so forth, and then sharply it pull back to it again. technically those two lines could be entry points if you do not mind buying it at a high level like this, but it's something to be a little bit careful. In this instance, buying it here could be an option as well, in the sense that it's going to be using that support line and continue going up for a while before it'll be done. When it'll be done, we don't know. That's why I just prefer to use the value line as the entry point, because that gives me the highest profit this way. So therefore, we may not sell it right away, because there is a chance it will continue to go up, pulling back, going up, pulling back. But we just need to know how long we want to stay in, because it's going to pull back to this line before going up again. We don't need to stay in it for the, to have the maximum profit necessarily. We just want to have a good profit in it, because it's going to take a while before it comes back to this line again, if we want to keep buying it at this, at the lowest line. Therefore, we want to stay in the chart for a while, because when we get out, it could take about a year or so. We can anticipate about a year or so before we can have an opportunity to buy it again. That is the long optional swing trading strategy that I'm using this year. So by looking at it, we know that, well, when it left here, it reached a new high here. We can say that it was around July, pull back a little bit, and around here was March, and here will be probably October. So around October it pulled back, but then that's when it started creating this mountain, and all the way to March, April or so. And then around September it came down here. So one thing we can decide is maybe around November or so we might sell it, or why not stay in it all the way to end of the year. That's why I put a note in here, so that I don't sell it too early. I put a note on it so that I can wait a little bit all the way to there, and then in November I can make that decision if I still want to stay in it or get out. But we'll have accumulated a good amount of profits. It all depends on the type of chart you are analyzing, the behavior of the price chart, that can make you decide, oh, it's okay to stay longer in the trade, it's just you have a good profit, it's okay, lock it in and get out. So thank you so much for watching our videos. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. You just start small, one share at a time, or the minimum amount that we can afford to spend on it. If that's just one share is enough to pay for brokerage fees after you sell it, and that's fine. One share, and you just target $1 profits, just to make sure your strategy is working with the stocks you are trading. And once you can confirm that you can make profit, no matter how small the profit, you can make profit, then you know that your strategy that you are using and the stocks you are using it with, they are comparable. And you just keep replacing stocks on your watch list. The ones that are now working well, you just keep taking them out and add news to the list until you have stocks that work well with the strategy you are using, as you customize your strategy to match your personality type, your risk tolerance. And once you have those two line up, you know that to make $2 you just need to buy 2 shares. To increase your profit, you just increase the number of shares you purchase. But start small. Thank you so much for your time. For more of swing trading related videos, please check the links to those playlists in the description of this video. Thank you for your time.